Good morning, everyone. So I wanted to do a live report and get right into it because while it's morning for probably all of you, it is still late night for me. It's been a long day. So let's get into it. And if you miss anything, this link will be available for subscribers immediately following the broadcast. And you can watch it then. So pound is on the move, and a couple of reasons. One, indirectly, is the election of the incumbent prime minister in Japan, and immediately declaring that there will be monetary accommodation for the yen, which finally sent it weakening. So QE couldn't do it, and negative interest rates couldn't do it, but Prime Minister Abe and his pledge to Abenomics finally got the yen to weaken, and we saw the pound yen rally along with other yen pairs. And not to be outdone, we got a little bit of certainty out of the British Parliament when one of two candidates for prime minister dropped out of the race, basically leaving one to inherently become prime minister, giving markets some kind of certainty after the surprise Brexit vote. And we're now seeing the pound finally rally. Now we're looking here at the pound yen, the euro pound, and you're not looking at the euro pound anymore. Okay. Forgive me here. Let me get back to the chart. Okay, so we're going to look at the euro pound, which for weeks, right, been writing about the bullish divergence that we've been seeing almost on all time frames. So you see here, we got nearly new highs on this weekly chart, and we started to get a little bit of divergence here. Not very distinct, but when you compare it to this tremendous rally we've had in the euro pound, it's been quite distinct. We've seen it on the daily chart. Little support on the daily chart. Daily chart's been overbought. Where we've really been seeing the divergence has been on the smaller time frames. So as we've made new highs here on the 4-hour, we're not getting the same in momentum. And we're waiting for this to top out, and we finally got above 85 last week. So we've been kind of waiting for this divergence to top out, and it hadn't, right? Really sterling just been weakening against everything, especially the euro. And finally last week we topped out at 86, and usually get a topping out at 86. You can see that price action. We jumped back a couple of years ago, and we see that kind of topping out at the 86 level. So last week when we broke above 85 and we were rallying into 86, started to get the feeling that we would top out again at 86 and put a short out on the euro pound, and it didn't pan out. We became range bound and were supported at the 85 level, which is kind of frustrating, right? And then this week with the fundamental events that happened, we finally got a break. We started to see a decline in the euro early Sunday, but it was still choppy, still range bound. This is our early Sunday morning action, and then Monday finally getting a break, but still finding buyers, finally cleared bids, finally cleared stops, and the pound is breaking lower. And basically, the pound is breaking higher, right? The euro pound is breaking lower, and it's basically happening across the board. In the QUID report in volume 69, showed this chart because last week the potential was that a break would find support in this fib level. But because of the news that happened over the weekend with the British Parliament, I drew ahead and drew out a larger fib, which would take into account the entire rally after the Brexit shock. So this large candle here is the Brexit vote, but everything after is all of this is the aftermath, and basically drawing a fib saying that because of the news and because we were range bound last week, that sterling would rally with strength, and that this smaller fib level would be inconsequential. I kept it on there because we don't know what markets would do, and it's a level that many traders have had on their charts for a couple weeks now, right? So I left it on there, but really this is the line in the sand that we were looking for. This is our target for shorts too, is the 83.78, this 38.2 fib. That if this trend is truly bullish, which it is, and if it's truly bullish, then we'll find support here and actually see bids step in here at this level. If not, if sterling rallies on anything based on what happens on Thursday, right? We have the BOE this week, and so if anything happens after that's bullish for the pound, we're going to see that 83 support level really needs to hold in order just for a clean continuation and a fib move that would take us to new highs above 86.26. So that's the pound. Now, I wanted to see if we could get in. The point of the broadcast this morning is just to see if we can get in this trade because it's already taken off on us. And again, don't chase. So if we, looks like we're gonna fall into the support level 84.30, the 50% fib at 84. Any bounces higher, that will take us back to 84.80. Even luck, if we could get something to take us to 85, we want to see a short there. So it's and if we draw a fib over, the decline so far, the 38.2, which is the level we always want to set up at on the euro pound, takes us right to 85. So we want to see a bounce in 85, just given the velocity of the move so far. Look for 84.80 to possibly cap for those of you still trying to catch this one short. Moving on to the euro pound, and we can see that just as we're getting this rip lower in the euro pound, we'll likewise find similar action, inverse action in the pound dollar. So cable is ripping higher, and again, right, last week we've seen this bullish divergence in cable, and on the larger time frames as well. And so this is pound, the pound dollar is actually one of the few ones that even on the weekly chart, where many of the pound pairs were catching new lows even in momentum and invalidating some divergences, the pound dollar has seen bullish divergence for the last 3 weeks. And we've been waiting for this to play out every time we've stepped in, gotten crushed really until last week, where we started to see this action, right? So we were getting failed lows. This fib move here, we're catching bounces that weren't really reaching the fib level, and subsequently they should fall to new lows or at least fall to the lows, and we weren't getting that. $1.29 really acting as support all along here, with some dips below to shake out, clear stops and shake out bulls who, gotten scared out. And I know I've got shook out of this trade a couple times last week. Finally, we're seeing a break above the 130 with some sustainability, right? So we got this a couple hours or several hours back. And so same thing, because this one is taking off on us, quick small fib to see where we could possibly get in long, and would really be at the 50 on the cable. We'd like to set up at the 50% Fibonacci level. That takes us to $1.30. You know, again, don't chase. You know, if we want to get long this one, we got kind of wait for the dip. That takes us to $1.30. But you see that we're coming up into these Fibonacci levels. But with given the velocity of the move, you know, we're setting up for sellers. And whether or not sellers step in will be largely dependent again on Thursday. And what we can see that there's a potential here for this retracement to really set up at $1.39, or even at the, you know, larger round number at $1.40, still be a correction. And that would be a correction over the entire Brexit vote and aftermath. So right now we're still correcting the aftermath. And if we were to draw this fib out here, this is the aftermath, right? That takes us to $1.34, $1.35, and then, you know, $1.3640 is that bigger fib move. So really, I think there's potential for pound to rally. Again, it all depends on Thursday, but I think that we will see a nice rally in pound. And what I tried to describe in words that I'm not sure I did a good job of it, but in the intro to the report, I'd like to comment on the fundamentals of pound. If the ECB cuts rates by 25 basis points, we should see a weakening of the cable, but it might not last, right? We might see an immediate buyers step in at lows on an immediate reaction, which would be weakness. If we're to see the ECB, the BOE actually cut interest rates by, say, 50 basis points, or even slip into negative interest rates, doubtful, but it's been a rumor out there for some weeks now. Slip into negative rates. Again, we could see immediate weakness. I mean, we would see new lows, and you keep your eye on momentum to see if we continue to diverge, but we could easily see new lows here. And an interesting phenomenon that we've seen, right, with the euro, with the yen, negative interest rates, and we've seen a strong currency. Who's to say we couldn't see that in sterling or in the pound? So just something to look out for. I expect this to continue to rally, and then the BOE will determine what direction we take next in cable. Pound yen, just like I said at the top of this broadcast, with Abenomics fully enforced and confirmed with the election of his party into parliament, we're seeing the yen finally weaken. So QE couldn't do it, and negative interest rates couldn't do it, and we're finally seeing yen rally. We're seeing a break here now of this level, the 618 level here. And if we just take a look at here, their potential is return higher. So this goes higher, certainly into Thursday's BOE announcement. And so we're already knocking close to the 50% retracement, which is a good setup for pound yen. Even higher at 138, which is a key level here. You see we have former highs at $1.38 or just above $1.38. I mean 138. So I would look for this pair to continue to rally into that level on Thursday. Yeah, if you're still looking to catch this one long, we want to draw quick. When I say quick, because we're using the 60-minute time frame, but you want to draw a quick fib here. And if we can get a dip back to 133.63, that's where you want to go long. And I scoff because I don't know, we might actually see if we get a dip off these highs, right? And it breaks lower below 135. Hopefully it gets to 134.50. That would look like a good short-term entry. Again, my preference is to get in a trade at the fib levels, and we don't always get that. So don't chase. I will just continue to reiterate that we don't chase. We patiently wait for the setup. Again, with the BOE, the better setup is just likely, you know, here at the highs. And so if we look over the entire decline since back in June, we're really looking at the potential for the pound yen to retrace to 142. So getting in at 135, if you think the BOE is going to rally sterling further, getting at 135, while I say don't chase, you know, relative to the potential move, seems like a good idea. Again, I'm going to say don't chase and wait for that dip. If we're looking at, well, let's take a look at the pound Kiwi before we get to the pound Aussie. This one really completed a Fibonacci reversal where we closed below 100, $1.77 for the first time ever, really. You can take, you know, a long-term view, and I mean, this was something we had called out last week, and it really wasn't expecting that to fall 1,000 pips like it did last week. But again, you call the direction and you never know what the market is going to give you. So that's what we got. It should not be a shocker with such a move that we get a dramatic bounce like this one. I'm happy to see a bounce actually. And given the severity of the move, I love the correlation with the confluence with the fib level and the major resistance level here, or key resistance level. So again, if we think that the BOE is going to be bullish for the pound, this is a great potential to get off the lows. This I'd like to wait, you know, to see what the initial reaction is. This one is still well oversold, even with the 300 pip bounce higher already. If we go lower and we see that we get divergence here on the 4-hour, or even some support, or see how momentum reacts at the lows or in selling territory on the 60-minute chart, and see what it does at lows. If we get a new low and we still get some good momentum, I would look to go long again if we believe that the BOE is going to be bullish for the pound. So there is still great potential here. Otherwise, again, I say don't chase. If you want to get in long and catch this rally ahead of the ECB, our quick fib gives us an entry really around 179 and below. So that is where we want to get in long at on the pound Kiwi. Really wouldn't want to get in long here, even though we are below 180, which is a lot better of an entry for longs than 180 itself or above there. So looks like we're been having support at 179.60. Once looks like 179.50. Yes, I'd wait just because of the volatility potential of the pound Kiwi. I'd wait until we drop to 179. No rush. There's no rush to get into a trade, really. We're always looking for the reason not to get in a trade, to be honest. And I wanted to keep the pound Aussie for last because this is really a laggard. This is the laggard out of all the pound pairs, majors that are rallying right now. We're seeing that the pound Aussie isn't. And, you know, the Australian dollar has been tremendously strong throughout this Brexit ordeal and even prior, right? Really across the board. Just want to check out if any questions have come in. Okay, great. And we are headed to these lows, I think. So we're going to the pound Aussie. This one is great potential because it's a laggard. Everything else is rallying against, the pound is rallying against everything except the Australian dollar. there's potential for the pound Aussie to still move higher as it falls into Fibonacci levels. So with this pair, you don't really want to get long unless we break below $1.72, and looks like price action is looking to do just that as bears push the issue. Short-term, very short-term bears push the issue, or you see profit taking above $1.7250. It'd be interesting, and I'm likely that we see buyers step in here and look for $1.75 on retracement. So news is light out of Australia this week, and really the market is going to be waiting on the jobs report that's released tomorrow on Wednesday. So look for that number. A weak number there would be a surprise to market and would be the catalyst that this pair would need to push higher and catch up with the rest of its fellow pound pairs. So just a quick run through to the pairs, especially since these rallies are gaining strength. I don't want anyone to chase, and just get an understanding of where on dips you can find entries and find opportunity, and some possible targets ahead of the Bank of England. Kind of want to be out of these counter trend trades before the Bank of England releases its announcements. So look for updates on the streams and in your inbox. Happy trades.